Welcome to another episode of the Soothing Semantics podcast. I'm your host, Rafi Pinsky. Make sure to subscribe, smash the like button, leave your comments. For all of your real estate needs, make sure to check out my Instagram at Rafi the Realtor. Check out my weekly newsletter to stay up to date and with everything happening in South Florida. Looking forward to, of course, helping you. So reach out to me via cell if you have my number. You can DM me, email me, and I look forward to helping you. Without further ado, we have Adiel Gorel, who is a real estate investor. I'm going to make sure to cover everything. Real estate investor, CEO of ICG Real Estate, keynote speaker, author of Remote Control, Retirement Riches, and Life 201. So 3 books. And then you have a book in Hebrew as well. So Adiel, thanks for joining me.
It's a great pleasure to be here with you, Rafi.
Awesome. So I listened to your TED Talk, and
you're still alive. It's an amazing accomplishment, really.
Right?
The only one.
It's great. Yeah, no, I'm still kicking. I'm still here, hopefully for a few more years,
Right.
Many more. So a couple of things I definitely want to discuss with you is I just want to pull up the question. Now you grew up in Israel, right? And we're not gonna we're gonna stick to real estate here because I know that's a touchy subject, but you grew up there. A little bit of a background about you, kind of a minute or two synopsis, and then how your upbringing kind of shaped your journey to real estate.
Actually, if we make it more than just a couple of minutes, it will lead us right into the heart of the subject. So maybe I'll take 4 minutes.
I'm all ears. Talk to me.
Okay, so my background is all in high tech. I'm a strict Silicon Valley guy, electrical engineering and computer science. I was living in Palo Alto. I was teaching at the university. Then I got my first high tech job. Back in the day, that's a long time ago, in the 1980s, there was no Google, there was many of these companies did not exist. So the place you really hoped you'll get a job was Hewlett Packard Labs in Palo Alto. And I was fortunate to get a job at HP Labs, which is very close to Stanford. And I got my first job. So 2 things happened. I was a young guy. The salary that HP paid me was far bigger than what Stanford did. So I felt, whoa, I'm a young guy, I'm getting so much, just like maybe an engineer now who starts working at Google, feels like he gets so much. And then some of my research lab people were in their 50s and 60s. And I thought, wow, they must be so wealthy if they've been working here for 30 years. Getting paid so much. Once I got to know my colleagues, I realized they were not wealthy at all. They owned their own home, and a 401k. I said, there's no way that I'm going to work here for decades and look like this financially. So I grew up in a family of real estate developers in Tel Aviv. My grandfather and my father built fairly large scale stuff. I didn't care about what they did because I was a kid. I wanted to play. But I couldn't not be exposed to the power of when you own real estate. So I said, okay, look, I'm living in Palo Alto in Silicon Valley. My salary is great. My credit is great. I'm going to start buying single family homes for my future. I'm going to build my own, my own empire. So since I was living in Palo Alto, since it was the 1980s, everybody said, you only must buy within 30 minutes drive of where you live. And everyone was following this formula, only buying 30 minutes drive from where they live. So I did too, I followed. So I bought in Sunnyvale, in San Jose, Silicon Valley. But after buying a few rental properties, I realized I couldn't build the empire in Silicon Valley because even in the 1980s, the numbers were bad. The rents were too low relative to the price. Mm-hmm. I said, if I really want to build an empire, I have to break the law of 30 minutes drive. So I did a little research. Now, of course, I didn't have the web, and Sergey Brin and Larry Page were in kindergarten at the time. But I was still in touch with Stanford, the lab that I was there, and they had the ARPANET, the precursor to the internet. So with a little search, I saw that if I flew about an hour and a half from San Francisco to Las Vegas, I could find homes that cost 1/4 of the Silicon Valley price. But amazingly, the rents that they were getting was closer to 1/2 of the Silicon Valley rent. That was so much better. I started flying to Vegas every weekend. Now, of course, I was extremely young. I always looked a little younger than I am, so I looked like a boy. The people in Vegas had never seen somebody buying out of state. Never. Nobody was doing it. And they were super skeptical that this kid from Silicon Valley is going to waste their time. So I spent my first month or two looking for a property management firm, because clearly, if I'm living in Silicon Valley in California and I'm buying in Vegas, I'm going to need a property management firm. So I interviewed firms, and finally I had one that I liked. But just because I liked them doesn't mean I was quiet. I didn't have a chance to test them in the field yet. Finally, a local broker took pity on me and said, I'll find you homes. And I started buying. Now, I was always very aggressive. So in my first year, I bought 22 homes in Vegas. Now, before you guys, the viewers, get impressed by that number, and if you promise not to laugh, I'll tell you that the average home I bought in Las Vegas in the 1980s cost $39,000.
I was about to guess 30,000. That was my guess, 30,000.
Good, very good.
Just about 40. Yeah.
Very good guess. 39,000 for the entire house. Not only that, but back in the 1980s, Fannie Mae didn't have a limit on the number of loans you could have. And even as an investor, I could put only 10% down with PMI, or private mortgage insurance, which is what I did. Now, buying 22 homes with these numbers for somebody who gets a good salary in Silicon Valley is not so hard. But it still was more than anybody that I knew. During that first year, my colleagues in Silicon Valley were making unbelievable fun of me, putting me down. Who buys out of state? Nobody buys even 30 minutes far. You're crazy. But after a year, when they saw me with my 20 plus homes, they started saying, well, they're logical engineers, right? They say, we understand what you're doing. We want to do it too. I said, you should go do it. It'll change your future. Mm-hmm. And they said, look, you know how busy we are here in Silicon Valley. You work here too. We have no time. You are there with your managers, with your homes. How about you lead us? I said, okay. So I led a group of maybe 20 engineers. And over a period of 3.5 years or so, we bought about 250 homes, not as a group. She bought 6 homes for herself. He bought 4 homes for himself. I bought a few more. But I realized a very trivial point. Even the very cautious guy from Silicon Valley who bought just one little home enjoyed the clout, the power of 250 homes, because the service providers knew.
You have a license for those? You have a license for those, Adiel? Or?
I'll get there in a second.
No, I meant, do you have a license for these?
Oh, no, of course. Yeah. With the new administration, maybe I'll get, okay. Anyway, so even the cautious engineer who bought just one home enjoyed the clout, the power of 250 homes. Because the service providers, the managers, realtors knew if he wasn't happy, he would complain to me. Now, I wasn't happy, and every other property management firm in Vegas was in touch all the time. Come to us, we are better, we are cheaper, we are nicer, we are taller. So that is a very nice thing to know. Now we jump into the present. I liked it so much, and I started getting invited to lecture about it, because it was so different back then. In one of the lectures was a reporter for the San Francisco paper. In the Sunday paper, there was a big article. I was invited to be on TV. Said, you know what? I like it much more. I dropped my high-tech life, started our company, and for 40 years, we've been doing the same thing, just on a large scale. My investors bought more than 10,000 homes in about 30 markets, but the principle remains the same. So we have a market maybe where my investors and I bought 2,000 homes, yeah?
Mm-hmm.
One person comes and buys one little home, he still enjoyed those unlicensed gun, the power of
Right.
2,000 homes, because nobody wants to lose this kind of business. So that's what we're
Right.
still doing. There's one other layer which is important, but I'll talk about it soon.
Interesting. Yeah. If it's very important, you're welcome to throw it in.
Well, I was blown away 40 years ago when I learned something that sounded not, it didn't sound possible. I realized that when I was buying my rental homes, I could get a mortgage. The name of this mortgage, everybody in this country knows. Unfortunately, hardly anyone thinks about what it really means. The only person who really gets what it means is a person I was in touch with in 2012 by the name of Warren Buffett. He gets it, but he's already old and extremely wealthy. That gift that is given in the United States is called the 30-year fixed rate loan. Everybody knows the name.
Mm-hmm.
However, we live in a country with constant inflation. Sometimes it's high, sometimes it's low, but it's always there for many reasons, which we are not going to go into. So the cost, of tomatoes, of the avocado, shoes, rents, homes, glasses, t-shirts, everything goes up all the time because inflation makes the dollar buy less. So you need more dollars to buy the avocado, the tomatoes, to pay rent and stuff like this. The only thing that I know in the US economy that never changes with inflation is your 30-year fixed rate loan. Not only the principal and interest payment, which never changes while everything else does, also the loan balance, which goes down with the principal payments on, your loan payments, it never changes. So inflation becomes your best friend, your BFF. It constantly erodes the real value of your loan because the tomatoes are now like 2 times more, 4 times more, 6 times, your loan is still the same. And you don't have to wait for 30 years. Mm-hmm. Usually the life-changing effects come between 12 and 14 years. So here is a story, and I have literally thousands of stories like this. I'll just say one. One of the things that's also very, very important to know is many people in the country, in the US, feel because I live in Philadelphia, I must buy in Philadelphia. Well, that is not true. You can buy all over the country. I set it up with an infrastructure of property management firms in every market that we buy. So you can choose affordable markets. I live in the San Francisco Bay area. To get a decent, nice home here, $2 million. Many people rent. And I rented for a long time because it doesn't make sense to buy. The rents are actually relatively low. But we buy homes that are brand new in markets in the country where you can buy now even a brand new home for $250,000. So when people realize that they can buy in other places, some people buy 6 homes or 2 homes or 12 homes or 20. I have people who bought 100 homes. I bought hundreds. It doesn't matter. Each one such home is a building block. But here is a story, a true story. I have an investor who called me up, a Silicon Valley guy, of course. He said, remember me, I started buying in my early 40s. I was concerned that the managers won't really take care of everything. So I bought just one home as a test. Once it's rented and I saw the managers really do the heavy lifting, I bought another one and another one. I understood, he says, your message about the 30-year fixed rate loan. I wanted to get as many of these loans. I put the minimum down payments that I could. So I bought another home, another home. I bought 19 homes. Again, not that impressive as it sounds. At the time he was buying them, these brand new homes only cost $150,000 each, and he was putting the minimal down on a big salary in Silicon Valley. So he says, last year I turned 55. I looked at my 19 homes, he says, and all my mortgages, which started out really high because I put a minimal down payment, now after 13 years, were only about 1/4 of the value of the home. That's what inflation does to a loan that never changes while everything else does. the home,
Mhm.
the rent, the shoes. Okay. So he said, first of all, I was super happy because over 19 homes, I had millions of dollars in equity at that time because the homes did go up in value.
Sure.
And then I sold 4 of my 19 homes, he says. I didn't do anything fancy, no 1031 exchanges, nothing. I sold my 4 homes, paid my capital gains as I needed, and I used the proceeds to pay off the remaining small 15 loans. And now with 15 homes with no loans, I retired from Silicon Valley. Thank you so much. And then he says the sentence that every one of my investors always says later on, I should have bought more. So
But
that's what
that's
it
the
was.
crazy thing. Where did That's such a good question. I wanted to ask you, and I guess that's just the typical question of how much do you want to work in life in general? How much money do you want to make? That's, I guess, the decision that becomes very challenging, right? Because it could never be enough, especially if you enjoy it, if you love the acquisition of new property and the constant thrill of doing new business and getting a good deal. It's like you have 500 homes and not enough, 2,000, 5,000. Before you know it, you're dead, you know? That's the crazy. I could see myself getting into that crazy obsession. I could see that. I would need to kind of.
No, but there's no need really because at the level of even 5 homes, 5 homes that when they're free and clear, even after expenses and the
Right.
property tax and vacancies, repairs and all of that, they bring you a very nice sum of money that will change the life of most families. 10
For sure.
homes, many people don't have to work at all.
Right.
15 homes, you retire in style. So one question, by the way, that you didn't ask yet, but I know you will very soon, so I'm gonna, preempt that.
Sure.
Why am I not retired? Why am I on the Zoom with you here? Well, I
I well, yeah. I thought you kind of were. I thought you were just kind of just doing it for your enjoyment. You don't,
No, no. I mean, I love what I do, as you can
Right.
probably sense. But no, I started this 40 years ago. I could have retired very, very nicely and about 25 years ago. But when I realized absolutely no one understands what the 30-year fixed rate loan really means in the face of inflation, I said, I don't want to retire. I have a message that changes lives. So I did the PBS show that is still running, by the way. 6 years later, I did, the TEDx talk last
Hmm.
year that I was invited to do. I
A
wrote,
million views, by the way, guys. That is a million views. You should. I'm gonna link it in the description so people can see it. Yeah.
thank you, Rafi. So working on book number 7, actually, and I just can't not share this thing that, hey guys, wake up. We have a gift in the United States that is life changing. It's called the 30-year fixed rate loan. Let me explain what it means. And I could be talking to a VP at Google, making a couple of $1 million a year, very smart person, a genius even.
Hmm.
Yeah, so what? 30-year, what's new? They don't get it. Why
Right.
don't they get it? They were born into it, they think it's normal. I come from another country. I look at this and this is abnormal. This is
Right.
too good to be true. When I speak in Europe, people tell me, no, you're wrong. It's too good, to be true. It can't be the case, but it is the case. So that's the main reason why I'm not retired. I have a message for the Americans. You can change your future just by getting this loan that will never change with inflation.
Are you still acquiring new property?
I have been in acquiring mode always, except I present such a challenge for lenders that people don't want to give me loans anymore. I own hundreds of homes,
Right.
and many lenders will not even, Fannie Mae will not lend you if you own more than 10. Many other lenders will stop at 30, 50. But when you own hundreds, it's not only that most lenders don't even want to have anything to do with me, but just my credit report is the size of a phone book. People say it's too much work for one loan
Right.
on a $250,000 home. Sorry, we don't want to do it. So as long as I don't get the amazing gift called 30-year fixed rate loan, I'm not buying. I'm not saying I bought a couple for cash, but I don't like to buy for cash. Plus, you said it beautifully. Why be greedy? I own so many homes. Don't need to buy more. If you said you're going to give me loans, I would be buying homes. But
Yeah,
nobody
yeah, yeah.
wants to give me loans.
That's so amazing. You got to the point in real estate investment where you have trouble getting a loan. And it's not because you have horrible credit or you're in a bad financial position. The exact opposite.
Well,
That's a good place to be. You know you made it when you're in that position.
when you
That's
work on a
fantastic.
loan, you work with a clerk at the lender, and the clerk just wants to check the boxes. And when you don't check the boxes, they don't know what to do.
Right. Right.
Many of my mortgages don't exist anymore, but I still have probably at least 70 or 80 mortgages left. I'm not so keen to pay them off. I'd like inflation to pay them off.
Yeah.
Inflation in
Yeah.
time.
You're paying them off. I mean, it gives you more liquidity, more money to do what you need. You explained that in the TED Talk. It's pretty solid common sense. So you mentioned the managers, and you mentioned this in the TED Talk, and you mention it now, right? The whole 30-minute radius of the house and people not thinking outside the box, afraid to step out of that line of thinking. You have properties all over the country. Maybe you have properties in other countries. I'm not sure. Do you? You have properties in other countries too?
Well, I happen to, but that's because I'm from another country. So I own a couple
Right.
of properties in another country. But
Right.
we tried. I had a VP that I hired about 20 years ago, pushed really hard for us to buy in other countries. Then I said no. In the US, not only is your title secure, you get the title insurance, everything is organized and well, and you get the 30-year fixed rate loan. We are only buying in the US.
Mm-hmm. Okay. So you have a bunch in the US and you hire property managers to oversee everything. What advice do you give to people that are skeptical to hire property managers, whether it be the cost that can maybe offset their profits? At least that's what people think, right? I have to pay this property manager. I'm not making as much. And then there's the idea of trust, right? Maybe stealing materials or just stealing money, doing something to screw you over. What advice do you have to really get people to take the jump and hire these companies?
All those fears are justified and legitimate. So the way that I solved it, and I harked back to it when I was talking about how I started in Las Vegas, having given the managers 250 homes to manage, they look at you as a giant client who they really want to please. They don't want to lose your business, plus the many dozens you may still buy in the future. So even now, when you join with somebody else, one of my friends or my friend buys just one home, again, I made those muscle thing. He enjoyed the muscles of 250 homes. Now we have markets where we bought 3,000 homes, 1,000 homes, 2,000 homes. So
Right.
the managers are not just managing one home, they're managing 1,000 homes.
Right.
That would be insane to be caught lying or cheating in any way, because I would lose 1,000 home plus the hundreds more we may buy in the
Right.
future. So to me, I know it's kind of tooting my own horn in a way, is you join us and come under this umbrella where we have already given this manager 1,000 homes and you'll be 1,001. So you have this clout, the power of 1,000 homes that we lend you. If you do it on your own, yeah, it's more challenging. You have to do a lot of due diligence, a lot of research, search with references and things of that nature. But to talk about the expense of paying the property managers, I'll give an analogy. I could clean my own home. It's not very small, but I could clean it. Will I do a great job cleaning my own home? Not so much, not my expertise, but I could. Do I clean my own home? No. I get a group of people to come here. Few hours are done with the whole house and I pay them, and I'm very happy to pay them because I can live in a clean home and I don't have to do the work. It's the
100%.
same thing. I own a couple of hundred homes. If I were managing my own homes, I can assure you, Rafi, I wouldn't be on the Zoom with you now I'd be
You'd be
hunched,
fixing toilets.
fixing a toilet at this very moment.
That's what you said on the TED Talk, and I love that.
I
Yeah,
would
yeah, yeah.
have no life. So I pay the management fees on all my homes very lovingly. Now, if somebody wanted to say, wait a second, a couple of hundred homes, how much do you pay? Yeah, worth every penny. Because now I have time to be here with you, to be with my friends, with my kids, to do this, to do that. I barely, and when you own so many homes, actually, I also have a full-time bookkeeper on a salary who handles even that. So, I mean, I don't even have to spend a lot of time on that.
Mm-hmm.
But, nowadays people can even hire bookkeeping in little chunks, on the web.
Yeah, yeah, totally. No, this is very helpful. Off the podcast, I'm definitely going to want to discuss this with you for myself. This is very, very, very good. So, uh, I mean, we covered a heck of a lot of ground here. One last thing I wanted to discuss with you was the idea of good debt versus bad debt, right? Because a lot of Americans have this notion that debt is automatically a negative idea. And any real estate investor knows there's good debt and there's bad debt. So the floor is yours.
Well, it's beyond just that. First, I completely agree with you. I hear some financial advisors just say, your goal is to have zero debt, zero debt, zero debt.
Like, what's his name? What's his name? Help me out here. David Ramsey.
And
Yeah,
and others.
yeah,
So, I mean, if that's the case, many people will have a very hard time buying a home, even though we are buying homes for 250,000, maybe 300,000 brand new. To buy them for cash, for most people, that's a big chunk of cash. But to
right.
buy it with 20% down, or that is much more doable. So that's where it's good debt. But the way I talk about it, as I said, only Warren Buffett gets it, and sometimes it gets quoted in the media. There's actually a magazine article in Entrepreneur magazine about my interaction with him, where he recognizes and praises the 30-year fixed rate loan. The 30-year fixed rate loan is almost a miracle. It's too good. It's not just good debt, it's our outstanding, incomprehensible debt.
Right.
Because not only is it fixed while everything else goes up with inflation, which means it goes down all the time. If you live in an inflationary country like the US, getting a debt that never moves is beyond crazy, beyond great. Warren Buffett recognizes it. He talks about it. I have not retired because of it. Guys
There are
and girls,
countries that are non-inflational. I didn't know that was a thing. I figured every country has inflation.
you know how it goes in absolutely the overwhelming majority of countries in the entire world?
Mhm.
Your loan is not only adjustable, but not adjustable like in the US with a lifetime cap and a yearly cap. No cap, no cap. You could get a loan for 500,000, whatever the currency is, and your payment is 2,000 a month. And you pay like clockwork, pay and pay for 10 years, for 10 years. At the end of the 10 years, your loan balance is $1.2 million and your monthly payment is 4,500. It kept up with inflation. It's only fair. Think about it like this. Suppose that right now you can buy a table for $1,000. $1,000 the table costs. And I'm lending you $200,000. So $200,000 you can buy 200 tables, right? 200. Now let's say you want to pay me 15 years down the road. Well, in 15 years, now you can, the table costs $2,500. Inflation, $2,500. And I want to pay you 200,000 back. That will only buy eight. That will only buy
So
80
how do you ever
tables.
pay it back properly? That's a nightmare. I mean, how do you? The loan essentially keeps going up because you said you initially took it for 500,000. Now you're paying $1.2 million,
Yeah.
and now the monthly payment, which was initially 2,000, is now 4,500.
Inflation. Everything kept up with
So you're in
inflation.
like a rat race for, meaning you're chasing your tail for it. Just that's what it feels like.
When people realize what we have in the United States,
Right.
they don't believe me. They say too good to be true, not possible,
Right.
crazy.
Right.
because they realize what it means to get a loan that never changes. In their countries, the payment and the balance always change with inflation, not with a cap, no lifetime cap, change with inflation. If inflation made everything 3 times higher over a certain period of time, your loan balance is 3 times higher.
So how do you ever pay off the loan? How do you pay the loan off?
Your payments are higher. And, it does work on amortization, but it keeps up with inflation, which when you think about it, it's only fair. Once again, if I lend you money now that can buy 200 tables,
Right.
is it fair that I will pay you back with money that can only buy, 80 tables? It's not fair. You
Right.
need me to pay you back with money that can buy 200 tables. That's what
Yeah, no,
you're
I get
doing
it.
to
I
me.
get it. Yeah, no, I hear you.
Yeah.
I hear you. Yeah, that's interesting. Okay. Well,
By the
I think
way,
we
I will mention one thing for your
sure.
viewers and listeners. For nearly the entire 40 years, once a quarter, we have a big event. We call it the ICG, Expo. And it used to be live near the San Francisco airport. I would bring in all the market teams. They would speak on the stage, show us the PowerPoint, their markets, property deals and stuff. I would take hundreds of questions, bring experts such as lawyers, CPAs, great day, whole day. Since COVID, we moved it to Zoom. We shortened it to 4 hours. And our next quarterly event is on Saturday, December 7th, this coming Saturday, from 10 a.m. to 2 p.m. Pacific Standard Time, which Florida time would be 1 to 5. Everybody is welcome to join. You can register for free on our website, ICGRE, and lots
Awesome.
of information.
Awesome. Awesome. Fantastic. So I'll make sure to drop any of those links. Are there any other links you'd like to mention? I'm going to put it in the description. The books are all on Amazon. Where
The books are
books are
all on
sold.
Amazon. And by the way, since I decided not to retire years ago, I needed to find a balance in my life. So I make music in my home studio, which is not here. Those are just some of the guitars. I make music. Actually, you can find that on all the platforms. Just, you put my name. I have a health and wellness podcast, actually, and 2 of my books are on health and wellness, actually. And the rest of the time, I talk to people. So I enjoy talking to people. I feel like it can change their lives. I would be happy to talk to any of you. Just get in touch with us.
Awesome. I'm
Send
looking
us an
forward
email.
to talking to you more often. Definitely.
Sure.
So, ladies and gents, thank you for tuning in to episode 197 of the Soothing Semantics podcast. We're very close to the 200 episode mark. Make sure to, again, subscribe, like, share, leave your comments. Real estate needs South Florida. I'm your guy. Make sure to reach out to me. We'd love to help. And again, Adiel, thank you so much for coming. Chad, he's not Chad is listening, but he's not on the actual episode. I imagine he's still listening in. So thank you again for making this connection. And that is that.